Welcome back. Well, for the Nifty, it's up around 100 odd points. We have the mid-cap index, which is up around 0.7%. We do have a lot of numbers which have come in from the pharmaceutical space in the past couple of days, the likes of Dr. Reddy's, Lupin. Today, we have Cipla, which is reacting to its commentary, which is down around 2.5 odd percent. And in the next couple of days, we will have the likes of Divi's Labs as well as Zydus, which will be releasing their numbers as well. So a lot of frontline pharmaceutical companies which will be releasing or have already released their numbers. So to discuss all this and more, we have an interesting guest with us today, Chirag Dagli, who's the fund manager of DSP Healthcare Fund, who joins in this morning to talk to us. Chirag, hi, welcome to the show. Well, you know, I've heard all of your questions on all of the analyst calls that you join in to every quarter. So I'm going to ask you about what you thought of earnings from the big guns this time round from the pharmaceutical space. Let's start with the likes of Dr. Reddy's, Lupin, as well as Cipla. On a larger scale, have they disappointed, met expectations or above expectations?
So I think by and large, companies have met expectations. The trends that we are seeing is that the Indian market continues to grow in double digit for most players. And the US is showing a little bit of cyclical turnaround. The ones that have, ones that have not met expectations is largely on the back of one-off products, which are, probably being extrapolated, much more into the future. And to that extent, some of these things will normalize as we go into the next few quarters. So by and large, I think earnings have been, in line with expectations. And a couple of large caps are still yet to report, and we'll see those trends. But these are the very clear two trends that we are seeing. Indian markets continue to grow in double digits, while US is growing, on back of a cyclical.
All right. So that explains the two broad trends that you are looking. Just for reference, from the fact sheet that we have with us, Sun Pharma accounts for nearly 17% of the weight that you have. Cipla is about 10%. Some exposure that you have in the hospital space via Apollo Hospitals, PNG, Lupin, that's among the top 5 holdings that you have. And then the other that you have are including the likes of Ipca, Alembic, Alchem, Sun Pharma, and Indoco. Those holdings come up for you on the screen. Chirag, your thoughts on how the incremental capital in the pharmaceutical and healthcare space should be allocated? How much would you, incremental 100 rupees would distribute between global players, between domestic players, and hospitals and healthcare, which have seen a big erosion in the price from the top because of post-COVID effects? Do you think there is value now in there?
So between the three or four buckets that you mentioned, we are far more sanguine on the India and the exports part of the business. India, because it continues to grow well, and exports because valuations are today in our favor. So these are the two buckets where incrementally we are also allocating capital. But we're being very selective in terms of what we own. And hospitals that you talked about, valuations are a little bit punchy versus history. That said, hospitals as a business is something that we like. There's massive entry barrier in this business, and our companies have done exceptionally well over the last 3 years, but valuations are a little bit punchy versus history, and which is why incrementally we'd probably buy more of exports and the Indian pharmaceutical manufacturers.
Okay. Chirag, how would you approach a couple of these names within the broader markets to basically invest in them or not? Case in point would be something like a Newland Labs, which has really seen a very strong run this year. It's up over 70% on a year-to-date basis, came out with blockbuster numbers, but the company themselves has said that their numbers will be lumpy going forward. So how does one actually choose a company from the broader markets when it comes to a pharmaceutical stock, considering that there are so many variables and triggers which are related to it? US FDA on one end, but a molecule working out or not on the other.
This is actually a very interesting point to make, Ekta. We've been, telling retail investors that it is very difficult to, to generalize this sector. Even within a segment like, let's say, CDMO, you will have one company doing well, one company not doing as well. So very difficult to generalize, catch a particular trend and then ride the wave. This is also a very fragmented sector. The market capitalization of basic healthcare index is probably equal to or smaller than the HDFC twins, and the profit pool is probably equal to one company, TCS. So fragmented sector, very difficult to kind of pick up individual companies, which is why what we always advocate is a more fund approach towards investing in pharmaceuticals or healthcare as a theme. Specifically to your question on some of these lumpy results that we've seen on some of the smaller names, like you mentioned, these tend to be lumpy on a quarterly basis. A couple of invoices, a couple of consignments could be worth $1 million, and that gross profit of that flows all the way down to profits. So these numbers can be fairly lumpy, and we wouldn't extrapolate some of these near-term earnings into the future, and we'd be cautious in some of these extrapolations.
Okay. Correct me if I'm wrong, but within the diagnostic space, you only have exposure through Vijaya Diagnostics?
Yes.
As a pure play?
Yes.
So you're not a big fan of the Dr. Lals and the Metropolises?
So I think what has happened is, so two things that have happened, right, in the last 3 years. Growth, which pre-COVID was in the early teens or mid-teens, has convincingly come down to early double digits. So that growth is much lower. Also, some of these companies have allocated capital. They have bought out, expensive M&A that they've done. What that does is that it saddles you with a low ROC acquisition. And if you ask me, I would want to buy a low disruptable business, which is radiology, is far less disruptable versus pathology, which is, you can order a test, but you can't do an ECG online, right? So, which is our method in that, in the kind of stocks that we have 5 or 6 names available. We think that radiology is a far more sustainable business, and to that extent, we own what we own. One interesting trend that has recently emerged has been the return of price growth. This was not existing for the last 3 or 4 years. In the past, mind you, price growth used to add about 2 to 3 percentage points to overall growth in the pathology business. That was non-existent for the past 3 or maybe 4 years, even pre-COVID. So that seems to be coming back a little bit. We need to still see if there's a trend here and whether this is just a bounce off of the lows that we've seen in the last 4 or 5 years, or is this sustainable into FY25? But this is one change in trend that we've seen.
Okay, just quickly, Chirag, last question then. You have exposure in lots of, majority or pure play domestic companies, Alchem, Ipca, Mankind. Are you expecting growth to supersede in the domestic market vis-a-vis those who have exposure to, say, the US generics?
So in India, we own companies that are actually gaining market share, that are growing ahead of the market. And all of these companies also have, barring a couple of them, also have a play in the exports business. We like to play the hybrid, mix of India as well as exports and try and see where valuation is a little more comfortable. That's how we try and play, rather than saying that, I will want to allocate more here because this is a business I structurally like. See, the India business, things don't change dramatically. Growth in a bad year will be 10%, in a good year will be 12-13%. So that's just the delta. And we try and play the risk-reward between multiple companies.
All right, Chirag, thank you so much for joining in and giving us your perspective on the entire healthcare space across all segments and where incremental capital should go, what you're looking at in the near and the long term as well. Thank you. Hope to speak to you soon as well. With that, we'll simply do a short break, but don't lose sight of the markets. We continue to do well. So on the other side, we'll get in Aditya Agarwala of InvestWithEdu to join in with some trading strategies. Stay tuned.